Good afternoon, everyone. Welcome to the National Fair Housing Alliance's webinar, Advancing Equity with First-Generation Homebuyer Programs. My name is Andrea Lau. I'm the Housing and Community Development Program Analyst here at NAFA, and I'll be moderating today's webinar. We're super pleased to have you here today. Throughout today's webinar, please feel free to use the comments and the Q&A box. We'll have time to answer questions at the end of the webinar, and we'll also be sharing the presenter slides and webinar recording after the end of the webinar. The National Fair Housing Alliance has recently released a guide to designing and implementing first-generation homeownership programs after conducting research, literature reviews, and interviews with organizations around the country who have established first-gen programs. In today's webinar, we're looking forward to sharing the findings of our guide with you and highlighting 2 first-gen programs currently in place. To do so, I'll first be joined by my colleague, Nikitra Bailey, Executive Vice President of the National Fair Housing Alliance, who will set the stage by covering why a first-generation lens for home buying programs is an important way to close the racial homeownership gap and promote racial equity. Nikitra will also contextualize this work against NAFA's ongoing advocacy in the first-generation homeownership space. Then I'll give an overview of our first generation guide by sharing some of the learnings we captured through our research and our interviews, and highlighting successful practices that led to the adoption of first generation programs at the regional and local level. We'll hear from 2 presenters whose organizations NAFA interviewed for the creation of this guide and whose innovative programs have been highly impactful in the first generation homebuyer space. We're pleased to be joined by Jason Peterson, Executive Director of NeighborWorks Home Partners in Minnesota, and Tracy Colores, Community Development Director at the North Carolina Office of Recovery and Resiliency. We'll then have some time for Q&A to address questions that we received from the chat box throughout the webinar. I'll turn it over to Nikitra now to speak a little bit about who we are and delve into the importance of the first generation homeownership concept. Nikitra?
Thank you, Andrea, and good afternoon, everyone. As Andrea shared, I am Nikitra Bailey, and I serve as the Executive Vice President of the National Fair Housing Alliance. The National Fair Housing Alliance leads the civil rights movement as the only national civil rights organization solely focused on ending housing discrimination and creating equitable opportunities. And we do our work through a number of our very important programs here at NAFA. We work on education and outreach, member services, public policy and advocacy, housing and community development, tech equity enforcement, consulting, and compliances. And through our programs and services, we serve over 200 private nonprofit fair housing organization members and local civil rights agencies across the United States. So we are delighted to have all of you here this afternoon. And my section of remarks will focus on the benefits of first generation homeownership and how the concept developed. So let's turn to the next slide, please. So why use a first generation homeownership lens? There are many benefits of the first generation homeownership concepts. And this concept was developed based on a wonderful program that was adopted in the state of Massachusetts. And today we are going to really focus on this important concept and why it's gaining a lot of traction across the country, the use of first generation strategies to advance homeownership. So you've probably already heard and are familiar with the concept of support for first generation college students. These programs provide additional resources for home buyers whose parents didn't own a home and are the first in their families to be homeowners. So like first generation college students, first generation homeownership programs are targeted for the communities with this history of underservice. And these programs are needed because people whose parents didn't own a home or did not benefit from previous homeownership policies actually are less likely to have the financial resources to support their children with help towards their down payment for their home, or they haven't been able to use wealth that they've been able to build up through the accumulation of home equity over time, or be able to offset it with things to help pay down for their college educations. And one of the things that we know is that white home buyers were more than twice as likely to have a gift of over $5,000 toward purchasing a home as compared to Black and Latino home buyers. So if you use this innovative and race-neutral approach, we can actually help to remedy the lasting generational impacts of our nation's discriminatory housing policies and practices, many of which are ongoing today. And it's very important, and as I'll get into through some of the slides, the future of homeownership is very different than what it has been historically. And we know that the vast majority of homeowners by the year 2030 are expected to be people of color. So we want to do everything in our power to ensure these first generation programs are in a position to aid first generation home buyers to enter into homeownership and successfully build wealth through the accumulation of home equity. So let me talk you through a bit of background regarding a program that NAFA has had its hand in helping to develop and create. So we have helped to create a first generation proposal. And again, the proposal was based on work done at the Massachusetts Affordable Housing Alliance program. And based on the proposal that we put together with our partners at Center for Responsible Lending, based on data from the Urban Institute, if we created a first generation down payment assistance program with $100 billion in investment, we would have a potential pool of 5 million consumers who are mortgage ready. There's a greater pool of 12.2 million consumers that would benefit from the program. But the way we looked at the data based on the results from the Urban Institute, it shows that the kind of day one ready pool of borrowers is 5 million. It is important to note that over 70% of these consumers are consumers of color. 34% of them are Black, 29% are Latino, and 29% are white, and 26% are Latino, and 10% are Native American, Asian, and other. And it's important to note that these programs, while they will help to solve for the long history of exclusion of people of color and communities of color from our nation's public policy, these programs also will benefit white residents, likely in rural communities that have been underserved by the housing finance system over years. So these programs are really important because they will allow us to bring in the very buyers that the future system actually depends on. And it will help us ensure that we have a healthy and robust housing finance system. I'm going to go to the next slide and then I'm going to come back to this slide. So the next slide, please. So if you look at this slide, what you see is that today's Black-white racial homeownership gap is 29 percentage points wider than before the Fair Housing Act was passed in 1968, where it was 27 percentage points. So we have a white homeownership rate today where white homeowners have about a homeownership rate at about 73%, Latino homeowners 51%, and African American and Black homeowners at 44%. So these programs can go a long way in helping us to close these gaps. And we can revert back to the next slide, please. We also put together a program that would create a first generation down payment assistance program for the government sponsored enterprises, Fannie Mae and Freddie Mac. And what that proposal would do would be to concentrate resources in the GSE's affordable housing programs. And if we did concentrate those resources, we would have an opportunity to create 1.2 million additional affordable home purchases for those affordability products. And those products are designed for low to moderate income consumers, similar to the proposal that we put together on first generation, where we would limit the participation in the program to first generation home buyers with incomes at 120% area median income. And this is something that we really spent time researching because we wanted to make sure we were able to reach the broadest pool of potential homeowners who would be mortgage ready on day one. We have recommended, and you'll hear me talk about this as I walk through the Down Payment Toward Equity Act, that it's important that we don't hold this standard for high price markets. So when you're looking at some of the coastal areas, we want to make sure there's flexibility to go higher than 120% area median income. So we've also advocated for the Down Payment Toward Equity Act. And we can go to the next slide, please. This proposal has been picked up in the United States Congress by ranking member of the House Financial Services Committee and the member of the Senate Banking Committee. So ranking member Maxine Waters on the House Financial Services Committee has drafted and put out and introduced the Down Payment Toward Equity Act, as well as Senator Warnock. And what this bill would do it would provide $100 billion to HUD to establish a grant program to provide financial assistance for down payments, closing costs, and costs to reduce interest rates for first-generation home buyers. And we are really excited because this has been picked up in Ranking Member Waters's Housing Crisis Response Act, which is the reincarnated version of the former Build Back Better Act, which is the very comprehensive $150 billion investment in sensible housing policies that would help to address the nation's fair and affordable housing crisis. So we are very hopeful that this legislation will move with any housing legislation that's moving. And it's needed because it will help families who have been locked out of homeownership and the federal government's prior investments in homeownership to be able to fairly enter into homeownership and overcome the largest barrier that most families face in entering into homeownership. Despite being mortgage ready, many of these consumers are already paying their monthly rent. And unfortunately, before recent actions, positive rental payment data wasn't used in underwriting. Since NAFA's advocacy, we have been able to get the United States Department of Housing and Urban Development and some of the GSEs to consider positive rental payment and underwriting so that more borrowers could enter into first-time homeownership status. So we are really excited about the Down Payment Toward Equity Act and hope that if any package passes in the Congress, that it is attached to this package. And we can move to the next slide, which will help really illustrate why these proposals are necessary. So we understand that in order to continue the health and safety of the housing sector, we need to ensure that all borrowers who can and are creditworthy can actually fairly access the system. And what we know about the housing finance system is that households of color will represent all of the future growth. So we have this chart here that shows what projected household growth looks like. So by 2040, we expect to net 16.1 net new million households that will form. And 8.6 million of them will be Latino, and 3.3 million of them will be Black. And it's important to direct your attention to the orange section of the chart slide, because it shows that there's actually going to be a net decrease in white household formulation. So we have to do everything in our power if we want to have a very health and safe financial housing finance system going forward, to make sure that the borrowers that the future system depends on can actually fairly access the market. And we can move to the next slide, please. And this is important because closing racial homeownership gaps and creating racial equity is something that will actually contribute billions to the economy and the United States' GDP. We know that we can actually grow the United States' GDP by $5 trillion over a 5-year period if we have equitable investments that address our nation's history of discrimination and ongoing discrimination that Black consumers face in the marketplace. So this is a scenario where creating this type of innovative and intentional support for first-generation home buyers is something that will lift the entire economy for everyone. So it's definitely a rising tide lifts all boats type of scenario. So let me pause here and turn the discussion back over to Andrea. Thank you so much.
Thank you, Nikitra. As Nikita presented, NAFA's research into first-generation homebuyer programs revealed the momentum around such programs being adopted by cities and states around the country in recent years. Thus, we decided to undertake a nationwide scan of these programs to understand their lessons learned and challenges faced to put together a reference point for organizations interested in implementing first-generation programs of their own. To do this, we met with staff from 8 programs of both state housing finance agencies and nonprofit organizations, 2 of whom you're going to hear from later today, and also reviewed publicly available information for several additional programs launched between 2019 and 2013. We profiled 5 of these programs in our guide and included a full detailed matrix of all the programs reviewed and their key features in the guide's appendix. Today, I'll walk through the suggestions and best practices we gathered for successfully developing a first-generation homeownership program. Meant in no way to be prescriptive, this is a collection of strategies that emerged from our research and interviews as successful towards creating a first-generation program and might help inform future design and implementation. Importantly, the first step must be to understand the demographics of the first-generation homebuyers in your community and understand the challenges they face in the home buying market. One way to do this is by analyzing Home Mortgage Disclosure Act, or HMDA data, which lists reasons for denial broken down by race and ethnicity. Another strategy that many groups used was to conduct listening sessions with diverse and inclusive groups of stakeholders. For example, staff from the Vermont Housing Finance Agency conducted a 3-month listening tour with organizations, agencies, and community members throughout the state. This combination of quantitative and qualitative data will be quintessential in providing justification for your programs and for informing the program features. Second, to design the structure of the benefits, most of the programs we interviewed layered funds for first-generation homebuyers with existing homebuyer program existence. In several cases, the program design was dictated by state legislation. Most programs covered in our guide offered between $10,000 and $20,000 for down payment and or closing costs in the form of forgivable loans, grants, or matched funds. Amounts will vary per market, especially in high-cost markets, but NAFA and CRL recommended in our first nationwide first-generation program analysis a minimum of $20,000 per applicant. The third step is to define the parameters of eligibility. The most common elements of a first-generation homebuyer among the programs we consulted were A, being a first-time homebuyer, B, someone whose parents do not currently own a home or have never owned a home or lost a home in foreclosure, or C, someone who was in foster care at some point as a minor or emancipated. Some programs require this of all borrowers on the loan, while others require this of only one borrower. Across the board, all the programs we looked at relied on self-attestation for verification, mostly in the form of signed affidavits or self-certification at closing. This was an important element in terms of program administration because it averted the operational barriers or bureaucracy that might arise from more complicated verification processes. It also made it easier for first-time homebuyers who were already navigating this process for the first time and may have found additional verification requirements about their parents' homeownership interest onerous or confusing. In terms of other program requirements, most programs used either state income limits or capped participation at around 100% AMI, and some had additional requirements about using approved lenders or loans. Fourth, we saw a range of funding sources across these programs. Some were funded philanthropically, like the STASH program at the Massachusetts Affordable Housing Alliance, which was funded by the Boston Children's Hospital, or through other grants, like our next presenter, NeighborWorks Home Partners, who piloted their first-generation program through a grant from NAFA's Inclusive Communities Fund. The Vermont Housing Finance Agency and New Jersey Housing and Mortgage Finance Agency's programs were created and funded by state legislation. The North Carolina Office of Recovery and Resiliency, whom we'll hear from later, used federal disaster recovery funding to launch this program. Finally, data will be important for evaluating efficacy and ensuring sustainability if possible. Much of the data for these programs will be the same data collected under existing loan programs. Reporting may also be dictated by the funding source, as in the case in New Jersey, where the state law mandated a report of all down payment assistance provided by the Housing Finance and Mortgage Agency, with details on the recipient census tract and race and ethnicity, and analysis on the impact of the assistance on the recipient's total housing costs. There are two additional considerations that we would advise for. First is a suggestion that program designers consider pairing a first-generation approach with a special purpose credit program, which may allow lenders to be more targeted and direct with their solutions to address racial disparities in the housing market. Additionally, program providers with a large service area, for example, an entire state, may consider limiting participation eligibility to census tracts or zip codes who have been historically under-resourced, that have high percentages of residents who are people of color, or that have above average percentages of low to moderate income residents. Now I'll turn it over to Jason Peterson, Executive Director at NeighborWorks Home Partners, who will discuss NeighborWorks' successful path from local pilot programs to legislative appropriations for a statewide program. Jason?
Great, thank you, Andrea. So you can go into the next slide. Thank you, this is great, right here. So my name is Jason Peterson. I'm the Executive Director with NeighborWorks Home Partners. We are a nonprofit CDFI lender based out of St. Paul, Minnesota. Historically, we have served the Twin Cities metropolitan region, which is about just over 4 million folks. And then through this program that I'm talking about today, we'll actually be launching our program statewide. So very exciting for us. We are a smaller organization. We have a staff of about 20. Historically, we support about 1,000 families a year through our programs. We help about 400 buy, fix, or keep their homes. But with these new resources, we're excited that we can scale up and help even more families. So just want to talk a little bit context here about Minnesota. So as Nikitra raised up some of these homeownership gaps across the country, I just wanted to highlight for a little context here in Minnesota. So in Minnesota, we have some of the largest racial disparity gaps in homeownership in the country. In any given year, we have about the 4th or the 5th worst, largest gap in the country. And so as you can see, just like across the United States, unfortunately, our gaps in homeownership rates continue to grow. And so what I would highlight here, was highlighted earlier, is about a 29% gap across the United States between Black and white families in homeownership. In Minnesota, that gap is 50%, as you can see here, and 33% between BIPOC communities and white. So we have very large disparity gaps. And in our MSA, in the Twin Cities Metropolitan MSA, we actually have the largest gaps out of any MSA in the country. So this was the context for which we were looking to launch a program. Next slide, please. So why first generation? So this has been talked about a bit. I'll just highlight a few things that are nuanced for us. Much of the groundwork for us was done by the Minnesota Homeownership Center. They are a funding intermediary and advocacy support group located here in Minnesota. So they commissioned a study several years back. And what was really helpful and important for us is they were able to quantify the need for additional down payment, put a dollar amount on what that would be. And they were able to highlight the number of eligible BIPOC potential home buyers. And then through that, put forward some recommendations. And we were really able to use this report for us for how we then crafted a program that we would look at. The high-level guidance that was provided, is similar to what was shared earlier. Expand the availability of innovative and targeted products designed to overcome the most significant financial barrier, affordability, and access to credit. I do want to highlight, this was raised up earlier, our organization, we actually do offer a special purpose credit program. And so that is actually a down payment first mortgage product for foundational Black families. We also offer a fee-based, i.e. Sharia compliant program. But we knew this program would be different because this program was likely to be supported by government dollars, where we've been able to raise some flexible dollars from these other programs. So understanding that, we needed to look at this race neutral opportunity, and the best proxy that we were able to raise up through this study was going to be with first generation. Next slide, please. So we decided that we would try this out. Nobody had been doing this in the Twin Cities metro area up here in Minnesota. And actually one of the first ring suburbs here in the Twin Cities, a more affluent community, came to us and said, we are interested, we have a goal of increasing BIPOC homeownership and providing fee-based wholesale lending options. And so the city has a population of about 80,000 and 76% of the population identifies as white. Average income is about 125,000. For us, the average income in our market is just under 80,000. So that's would be considered an affluent community here for us. We already had an existing relationship with them. We had, with this city, we administered their home repair and their down payment programs. They had a tax levy that raised these dollars. So it was general fund dollars. So we didn't have CDBG or home or other limitations, but all programs were amortizing loans. The city was really interested in getting a return on investment. They were below interest, but they were amortizing. So they came to us with this goal. And so we worked closely with both the city staff and city council on what other options could we have for this, and using this idea from the study from the Minnesota Homeownership Center and others doing this around the country, we suggested a first generation down payment program. And so we launched this in 2019. What made it different, it was 0% interest and deferred. So there were no monthly payments and no interest tied to this. So it did not amortize. And so to date, we have provided 29 first generation loans utilizing these funds, and 83% of the families that have utilized these funds represent BIPOC communities. Next slide, please. So understanding that was still a small pilot, then the National Fair Housing Alliance came out with this Inclusive Communities grant opportunity that was mentioned. And so we utilized our work with Woodbury, and we wanted to scale this up to additional geographies. And so we were fortunate to receive a grant award in 2023. Some of the nuances about the program that I want to raise up that I feel are important is we did have some discretion in structuring this program. The dollars were flexible that we received. And for us, we felt it was very important to not only provide that access to the capital so folks could have the dollars they needed to be able to overcome the barrier of those upfront costs, but also the wealth generation aspect to this. And so with the grant that we received from the National Fair Housing Alliance, we did structure this as a 10-year forgivable loan. So it allows folks purchasing these homes to gain wealth. And then understanding the grant amount was small. We were able to help 16 families, but 87% of those families represented BIPOC communities. And so this again showed us that this concept was working within our community. Next slide, please. So these are two still relatively small pilots, working with about 45 families, but we felt we had proof of concept. And so we actually worked together with a coalition of partners. One of the big leading organizations within this was actually the Minnesota Association of Realtors. And so they took a very important lead in this work, but also worked with a number of lenders and a number of nonprofit providers. And we decided that we were going to seek a statewide legislative ask for this program. And the idea was really to scale this up. We had been offering this program first in one city and then across the Twin Cities metro area, but we wanted to scale this up to a statewide and help thousands of families instead of 45 families. So we worked with state legislators to champion this. This took a lot of work, ensuring that we were able to have the support both in greater Minnesota and more rural areas, but also in the urban areas, and crafting a program for what this would look like. And our ask seemed really bold. I mean, if you look at the award that we received from the National Fair Housing Alliance to the ask, our first ask was $170 million. So that's 1,000 times the pilot that we had. But we really felt we had good proof of concept, and we really felt that this was important. So in 2022, we did seek $170 million. We were not funded for our program that year. In 2023, we sought $176 million. And we felt that this would allow us to serve 3,000 families as a large demonstration pilot across the state. And we were funded, and it's amazing. And I'll talk a little bit about the program, but I'll just briefly the breakdown here. The way that this actually worked was the funding actually was approved at 150 million, and they split it into two pots of money. And so $100 million was allocated for a community-based first generation down payment program, which I'll talk about on the next slide. And then 50 million was appropriated to the Minnesota Housing Finance Agency for them to administer. Our Minnesota Housing Finance Agency does have some first-time home buyer loan programs. And so this is an additional incentive for first-generation buyers and enhancement. And so they have some additional dollars as well. So we went from the small pilot that we were doing to what we thought was potentially an audacious ask to $150 million for a statewide program across our state. Next slide, please. So talk a little bit about this $100 million. So it's $100 million. So it is a direct appropriation of state funding. And so it is not federal dollars. It does not have, again, the CDBG, home, other requirements behind it. The way the program is set up is it's a hub and spoke model. And so Midwest Minnesota CDC is the administrator. This came about as $100 million is a lot of money. Our organization has about $20 million in assets. And so in talking with the state, they didn't feel it's feasible for our organization to be administering this. So we talked with a partner who has a statewide operations already in place, Midwest Minnesota CDC, who's a great partner, and they're the administrator. And then they're working with 10 origination partners across the state. The origination partners are CDFIs, tribal entities, and other nonprofits that have proven track record of providing down payment assistance. The way that we've set this program up is the loan amount is 10% of the purchase price up to $32,000. Our average home price in our state is $320,000, and so that's where that number came up, and that is where we felt was important. We did go with a suggested and was approved for the program was approved as a 5-year forgivable. And again, this for us was prioritizing that wealth building aspect to this. And so this was an important piece as we continue to see these disparities grow. How can we ensure there's wealth building and not just access to credit? Big change for this one. It's available all throughout Minnesota. So as was mentioned earlier, this was a big change because all of the first generation programs had initially just been in urban areas. And so this is some different support, but this also allowed us to get some different political support from different parts of the state. And we do have also a substantial Native American population, and so ensuring, and that's primarily in outstate Minnesota as well. So how can we make sure that we're supporting holistically our state? I do just it was raised earlier, the definition, and we kind of followed the typical definition for a first generation, except I do want to call out, as was mentioned, as a possibility that as a home lost to foreclosure, that is an exception. Another piece that we feel is important is this can be layered with other down payment assistance. And so when we worked with the National Fair Housing Alliance dollars, 100%, every one of those 16 loans was paired with at least one other down payment assistance program. For us, those were only $10,000 loans, and we found folks need about $30,000 to $40,000 in our market right now. So while this is $32,000, we do allow this. So this program just launched last week. So we're really excited about this. At the bottom there, firstgendpa.org, if you're interested to check it out. I would encourage you to. There's a lot of great resources there. We actually just started getting our first borrowers in today. So we're really excited about that. Of this $100 million, and there's 10 different organizations, we've been allocated $30 million, or just under a third of that will be administering, and we're the primary administrator both in the Twin Cities, and then we're covering any of the different holes across the state as well. So very excited about that. I will just quickly mention the state program. They got $50 million. They launched about 45 days ago. And they had $50 million allocated, and just got an update from them this past week. They've already committed 20%, so $10 million has already been committed in 45 days. And so the need is there, the eligible borrowers are there, and we have a relatively tight market. It's about, we got about 2.5 months inventory, so relatively tight, but folks are finding homes. And 79% of that $10 million has been allocated, is going to BIPOC buyers. And so we're really excited that this small pilot that we started with the local community that National Fair Housing Alliance was able to support is really showing, that proof of concept at this greater scale. So we're only 45 days in, but it's really exciting to see this. And then we're really excited for us. This is just a larger pilot to show that this really works. And then we can get this as a standing line item within our state budget going forward. So, and then next slide. And that's it for me. So thank you so much.
Thank you so much, Jason. Congratulations again. Now I'd like to welcome to the stage Tracy Colores, Community Development Director at the North Carolina Office of Recovery and Resiliency, to discuss their office's innovative approach to launching their homeownership assistance program. Tracy.
Thanks so much, Andrea. And it's great to be with you guys today. And the Minnesota program looks very impressive. Thanks for sharing that, Jason. As Andrea mentioned, I'm with the Office of Recovery and Resiliency with the state of North Carolina, and we are a temporary agency established to disperse funds received from HUD's CDBG grant program that's designed for long-term recovery from the effects of natural disasters. And we have about $1 billion of disaster recovery and mitigation grants that we are administering. What we are interested in, most of that money going towards, is repairing the homes of homeowners and reconstructing homes for those entities that have experienced loss as a result of the storm. Can we go to the next slide, please? We did have a small amount of money that we wanted to use for down payment assistance. And the first thing we did was survey the local government leaders and the community agencies and other stakeholders in the areas most affected by the hurricanes to ask them 2 questions. First of all, have the storms had a negative impact on the supply of affordable homeownership opportunities? And you see that we had a 94% top box score on that question, which indicated that a strong agreement among the communities that we were trying to serve with the need. And then we asked the follow-up question about whether down payment assistance could help the community recover. And again, the top 2 box there of 88% score was very high. And when we asked for in free-form question form, what's the most beneficial way for us to help would-be home buyers? Overwhelmingly, the number 1 choice of all respondents was to provide financial assistance. So what we did was we had learned of the Urban Institute study that Nikitra mentioned at the beginning, and we had a chance to work with Samuel Gunter at the North Carolina Housing Coalition to help us design a down payment assistance program that could be very effective, and combining his advice with the information we had from the Urban Institute. What we wanted to be able to do is, even though we had a small amount of money, was to have a bigger impact with the dollars. And both of them were very supportive of us looking at a first generation program. We then talked with the leadership at the Center for Responsible Lending, and they helped us fine tune the design and do things like, for example, we know that homeowners are more resilient in the face of a natural disaster than renters are for any number of reasons, not the least of which being that generally homeownership remains the number 1 way to accumulate wealth for those of us that aren't inheriting it from our families. And so folks that have a stronger financial foundation do better after storms. It's just a fact. Plus, if you've gotten your first mortgage through the mainstream mortgage lending community, you're going to have insurance, which many renters don't have. So there's a very immediate as well as a longer term resiliency implied in being a homeowner. And so for that reason, focusing our efforts on first gen to the extent that we were able seemed like an excellent way for us to advance our goals of increasing resilience in those communities that had suffered from 2 large hurricanes in less than 2 years in our area. Next slide, please. The very high level elements of this program design are shown on this page. We had a total of, we've got a total of $4.5 million in our program budget, and we are able to use all but $100,000 of that to fund down payment, closing costs, and just the administration of the program. And then what we are doing is teaming with the North Carolina Housing Coalition's statewide network of HUD certified counseling agencies and counseling agents to provide the level of pre-purchase homebuyer education and any additional housing counseling that our prospective homebuyers need. Because if you've got a first generation homebuyer, as you can imagine, they didn't grow up around the practice of maintaining a home as a homeowner, making the mortgage payments, those types of things. So there can be additional educational needs there just to ensure that they are successful. And the way we like to talk about it is that we wouldn't put someone behind the wheel of a car and expect them to know exactly how to drive it safely and effectively. And so when it comes to owning a home, giving the prospective home buyer all the tools they need to be as successful as possible with that is, we think, part of our responsibility. On the left side of the slide, you'll see the basic structure of the financial assistance. We have a 3-year forgivable loan that provides all first-time home buyers with up to $20,000 or 20% of the purchase price. And then for first-generation buyers, they are eligible for up to $30,000. And we haven't required that to be paid back because, again, our goal here is wealth accumulation and helping the communities we're trying to serve to get a toehold on that property ladder so that they can be more successful in the future and be more resilient in the face of all the things that they're going to be dealing with. In addition to the loaned down payment assistance, we do allow up to 5 percentage points in closing costs, and those are granted because they are associated with the financing transaction and not with the purchase of the home itself. So we didn't want to have any kind of secured lien on that. Another point about the 3-year forgivable loan, we chose that route rather than just granting the funds outright, because in previous down payment assistance programs, we had seen a disturbing trend with online lenders harvesting equity from folks that had been able to get into homes as new home buyers using down payment assistance, and they would be targeted with solicitations to do equity takeout financing, which would leave the new home buyer with a reduced wealth position, no asset to fall back on, and a higher debt level. And so we thought that putting a 3-year term in there and make it fully forgivable, that would help our newfound home buyers get a bit established in the home. And if a situation arose where they needed to draw that money out to, like if a family member had an expensive hospitalization that they needed to help support them, we wouldn't stand in the way of anyone doing that. But we were just trying to prevent the unscrupulous harvesting of equity by aggressive online lenders that we had observed. And we also have a provision in there that allows for if a home buyer gets into trouble and they are no longer going to be able to maintain the mortgage on their property, then we can forgive those that repayment of those funds as well, so that we don't put them further in a hole as they are trying to make their way out of being a homeowner. And in some of these cases too, when we were doing the design of the program, in addition to talking to those experts that helped us with the design. We also talked to members of the mainstream mortgage community, because what we had seen at the time we were working on the design of this program is that many lenders advise their realtors and their prospective borrowers to avoid government-sponsored down payment assistance programs because of the amount of time that they add to the mortgage process. And so we specifically designed this program to be as time efficient as possible in order to ensure that it wouldn't be objected to by any of the lenders, that we needed to come with the majority of the funds that our home buyers are going to be using to buy these houses. And we also made sure that the lien that we have, subordinate lien that we have securing the financial interest in the down payment assistance, immediately dissolves if the property is taken back by the lender, so that again, it didn't increase their administrative or financial obligation in any way. Next slide, please. To date, we've been very pleased with the program, and of the 235 applications that we have processed, we have 69 closed loans. We have seen the majority of the referrals for this program coming through the lending community rather than the real estate professionals or direct from consumers, which I can't say that we expected that, but it tells us where we can focus our marketing efforts in the future, and possibly also get some ideas about how we can enhance the program's features to make it even more appealing to the population that we're trying to serve. We've expended not quite half of the dollars that are available, and of that total expenditure, about 20% has been granted for closing costs. And our dollars are constituting roughly 60 cents of every down payment dollar that's being used to buy homes in our target market. Demographically, 1 in 2 of our home buyers identify as Black or African American, and almost 1 in 2 are in fact first generation buyers. And 47% of the households that we are helping buy houses are either female households or female headed households. And with regard to area median income, we have almost 7 out of 10 of our households are at 80% and below area median income, with the balance being 81 to 120% of area median. And you see the averages per transaction in the box on the right. And you will see in the next slide, I guess we could go ahead and go to the next slide, please. Just shows you where this program has been popular. The funds as awarded by HUD to the state of North Carolina for recovery from the hurricanes had a specific geographic area that they needed to be concentrated in. And so the counties this is a county map of Eastern North Carolina, the counties with the house icons and the counties with the asterisks constitute the 16 counties where we are able to spend these dollars based on the design of the program that we have. And you'll see that we have succeeded in lending these funds in 12 of the 16 most impacted and distressed counties in Eastern North Carolina, which is saying a lot, because some of these counties don't even have brick and mortar banks in them anymore. You know, with the exodus from rural America and financial services underserving a lot of markets, we've been very happy to see this uptick in activity in some of the poorest and most underserved markets in our state. And I alluded in the previous summary page a little bit about the demographics and racial and ethnic makeup of our home buyers. But here's a more detailed chart showing you exactly how everything has fallen out. And we're very excited about the next phase of this program and being able to reach even more families. And like I said, learn from those of us, those that we're working with, how we can make the impact of this program even greater. And I'm interested in hearing the thoughts from the participants on here as well. Thank you.
Thank you, Tracy. Now I'd like to invite all our panelists to come back for a Q&A session in the time that we have remaining. We have a few interesting questions from our participants in the Q&A box that I would love to delve into, and please feel free to submit your questions now if something occurs to you in the remaining time. Jason, we have a question here that was interested in the data that you presented on the racial homeownership gap in Minnesota. They're interested in how you analyze that data, and if you have any advice on how other municipalities might establish their racial homeownership gap.
Yeah, thank you. So we were fortunate again to be able to utilize some data that was put together by a local advocacy group. But what I would say, just a couple of ideas in different areas that we've gotten similar information or information we use throughout this is, so we had a local, it's actually a statewide entity, the Minnesota Homeownership Center, and they were able to get some foundation funding to do this deep dive study. And so I think if you have whatever municipality you're looking at, if you have somebody there that is interested in taking the lead and can connect with any foundations, we were able to get, this group was able to get funding for that. Another area that we've worked closely with is our local Federal Reserve Bank. They actually have been able to provide us with some pretty detailed information regarding some different pieces around this. So whatever your local Federal Reserve Bank is, you can connect with them. We didn't use another option that we didn't use specifically for this need, but we've used for similar needs is the University of Minnesota, and up here in the Twin Cities, has what's called the Center for Urban and Regional Affairs. And they have service projects that they provide to nonprofits. So we have questions very similar to this, and they'll do really deep dives at no cost to the nonprofit. So you might want to check with a local university to see if this is something that they would do. And then lastly, I would say we have locally a nonprofit research center. It's called the Wilder Foundation. It's specific for us, but you might have something similar to that, and they'll take on different projects and generally have to queue them up, but they'll take on different projects like this. So for this specifically, we were fortunate to have a local group that was foundation funded, but we've needed similar data, and those are the places that we've gone.
Great, thank you. Our next question is interested in, we talked about this a little bit briefly, but Jason and Tracy, this would be a kind of great space to share your experiences, but we have a question that's interested in how the first generation guideline is confirmed. In other words, how can you determine a first generation buyer? Is there a title search done? Either of you can take that.
Yeah, this is Tracy. I'll start. We looked into this extensively, and it's very difficult to prove a negative. And so to prove that your parents have never owned a home, for example, would require an extensive search of the property records, which are not, to our knowledge, nationally aggregated anywhere. So it would involve checking theoretically every jurisdiction, and we recognize that it was going to cost way more to do that kind of exhaustive, eliminative search than we would see possibly someone coming in and claiming to be first gen when they weren't. Plus, combined with the fact that we do have them swearing that they are, we knew that we could recoup the funds if we discovered that, in fact, they were not first gen, and then simply lend them back out to the next family. So that's the choice that we made on that.
Yeah, I can just follow up. So it's similar line of thinking, for us, and I'm sure this is similar to Tracy, we do have them sign a first generation homebuyer affidavit. And this is a legal document, and this confirms that you're meeting these qualifications. And if someone knowingly misrepresents their eligibility, they are committing mortgage fraud. So just like any other part of the mortgage application process, if somebody is knowingly misrepresenting, that is mortgage fraud. And so that is a legal document that we include within the application process.
Andrea, if I could chime in, I just want to share that the Down Payment Toward Equity Act requires borrowers to have a self-attestation. The goal is to make it as simple as possible for borrowers to be able to comply and enter into these first generation down payment programs. And I also want to share that in terms of the guidelines, what is really important is to make sure borrowers that might have an interest in heirs property, to make sure those borrowers are not excluded, because we know that many African Americans and other people of color may have that interest and live in places that have historically been denied fair access to federal homeownership policies and programs. So those programs have been recommended to make sure that those borrowers are not excluded. And also for an inclusionary standpoint, we have recommended in the Down Payment Toward Equity Act that if a person owned a home in another country, that those people are also not excluded. Again, many families who come from different countries to the United States may have owned a home there, and they still face barriers that they have to overcome in seeking out homeownership opportunity in the United States. So we thought it very important not to exclude that population of buyers.
Thank you. We have a great question here about any best practices on sharing your outreach programs. How do you market your programs to target consumers? I know that's a huge part of what we discussed in our conversations with you all.
Yeah, I can talk a little bit about our program. So we, as I mentioned earlier, one of the key organizations that led our initiative was the Realtor Association. And so we've done a lot of work with the Realtor Association, both statewide and then within different jurisdictions and municipalities, and spend a lot of time there. We've also spent a lot of time with the Minnesota Mortgage Association, and so really working with lenders, a number of lender training and a number of lender outreach. I think a big important piece for us, though, is we've spent a lot of time working directly with different affinity groups such as NARAB, NARAB, and ARIA, and really ensuring that we are connecting with folks that are going to utilize these dollars. And so we've been very proactive about that. It's the one thing that's benefited us about the money being split into two programs is the state receives some dollars as well. And so they've also utilized their outreach efforts. But what we've done on an on-the-ground level, and I think an important piece about our community base, is it's 10 local entities across the state. And so we are CDFIs and tribal entities that are embedded within communities. And so we're really intentional about, the program was really intentional about including those as originators because we are already working closely with folks.
Yes, and we've used the public notices and press releases to announce funding availability. And then we've also worked through NAREP, and also we did a live webinar that the local Hispanic Federation officers put together for us that had consumers, interested consumers participating as well. And then we will feature on our social media program profiles of individuals who have been beneficiaries of the program in different communities in the geographic footprint that we are able to operate in.
Thank you. I know we have about a minute left, and we honestly do have some really great questions that I apologize that we can't get to. I will say that in our follow-up materials, when we send the PowerPoint slides, the slide deck, and the webinar recording, we can include all the presenter contact information. To make sure that anyone who has any questions can be connected with the folks who can provide them some answers. I know that, we have some questions here about providing consumers support after the home purchase in terms of home remediation and the home improvement needs. So those are, I know that if you reach out to us at NAFA or Tracy and Jason, we can connect you to the resources for answering those questions, or really any questions that you have in terms of designing your own first generation programs. So I would, with deep gratitude, would love to thank Tracy, Jason, and Nikitra for your time today for this really exciting and topical conversation. Thank you all for attending, and we will be in touch soon with the follow-up materials, and we hope to see you at the next NAFA webinar. Thank you.